Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10 a.m. markets have managed to recover quite a bit of lost ground since we saw it in the opening at around about 9:50. Before I go any further, let me give you certain levels on Sensex, Nifty Spot, Bank Nifty, Rupee Dollar and crude oil. Sensex is trading at about 79,500, up about 15 odd points. Nifty is trading at about 24,150, absolutely flat with the gains of about 2 odd points. Bank Nifty or Nifty Bank 51,570, up about 30 odd points. On the rupee dollar equation, we have seen a historical low on the rupee. Not only the rupee is lower, but currencies across certain developed markets and emerging markets have seen weakness against the dollar. On the rupee front, 84.38 rupees to a dollar, and the weakness is about 0.00002 paise. On Brent and NYMEX, sizable downtick meaningfully welcomed. $73.58 to a barrel is Brent, $70.01 to a barrel is NYMEX. Firstly, on the crude oil and rupee front, well, crude oil, as always, situation, developments, news flows from Middle East will drive the moves on the crude oil front, higher and lower. Lower with positive news and higher on fallback of negative news flows. On the rupee dollar equation, well, the assumption was that we might see some amount of dollar supply, which we did saw last week when the rupee weakened against the dollar at levels of 84.10, 84.15. But then the dollar strength continued across major currencies, including the INR, and the resultant is that we have seen a historical low on rupee against the dollar of 84.38 as I speak to you. On the market fronts, well, last week we had mentioned about 23,800 and 24,000 as a crucial levels, because the Nifty in the weeks gone by managed to bounce back from those 23,800 odd lows that we saw. And then again this morning we saw 24,000 on the Nifty Spot acting as a lower support zone. Needless to say, the selling from FIs, and of course the fact is that we are going to enter year end, which might have elevated selling whatever remains from the FIs because of the year end. So but on the flip side, of course, the domestic institutions have been very supportive, and in fact there are days when the domestic institutions have outsmarted the sell side number from the FIs, and primary reason why the markets are seeing support coming in at lower levels. So expect this kind of buying side support to come in from the domestic institutions. But sell side, though large part has been done, but there are still views on the street that FIs, because of the Christmas, New Year, they might come and possibly report a little bit of more sell side number. But we expect that number on the sell side from FIs to be much lower compared to what we've seen in the month of October gone by and in the beginning of the month of November. On the other data points, friends, Q2 earnings, which was a little bit of disappointing, will see a decisive curtains down this week. Whatever remains will be done and dusted this week, and an overall analysis of whatever we've seen up till now is the fact that there has been a little bit of disappointment across the sectors in terms of what the street expectation was and what the corporate India reported in terms of Q2 numbers. It is important to note that the commentary from the management was of the view, by and large, that recovery will be visible in third and fourth quarter, and possibly from next financial year, that is 1st April 2025, that recovery should pick up more momentum. There are a lot of concerns on the streets, a lot of voices on the street which are quite negative as far as the earnings season is concerned. But our view at Geojit is that, not looking at just one quarter earnings, you have to look at that with the cumulative approach, and with expectation depending upon what the commentaries have been from the management of certain companies, large cap and mid cap, that recovery is visible. So one off quarter cannot be a reason to take hasty decision in terms of exiting some strong fundamental stock which you have got invested. In fact, if you have understood the commentary and if you have read into the fine print of the numbers, then our advice would be that those strong companies do have much more credibility, and in case if you have investable amount to invest, you could possibly increase, but don't take any hasty decisions on fallback of certain reports which are there on the street from your long-term investments. Truncated week this week. Friday, 15th November, Friday will be a holiday on the exchanges, so we have a truncated week. Thursday might be an elevated day to look forward to in terms of choppiness and volatility, and of course what happens over the weekend and coming back into the next week. Next week again, due to state elections in Maharashtra, 20th of November is going to be an off for the exchanges and for other corporates, enable people to go and vote for the state elections. So next week also is going to be truncated. Rupee at record low, like I mentioned. Expect this weakness to again further drag down the rupee against the dollar, depending upon what the moves are of dollar and what the news flows are. Significant to note that sizable recovery has come in, so one can assume that the levels that we mentioned last week can hold out this week also, that is 23,800 to 24,000 on the Nifty spot. On the higher side, 24,300 to 24,500. These are crucial levels in terms of resistance and sell side pressure getting aggravated, which may possibly give you a sense of an absolute range bound trade, and that range is 23,800 to 24,000 on the lower side, 23,300 to 24,500 on the higher side. One more thing that we have to keep in mind is the volatility in the India VIX. Last week we saw a lot of choppiness and volatility on India VIX front. As I speak to you, the India VIX is about 14.63. This has to settle down lower, closer to 12, to have any meaningful conclusion with respect to the volatility coming down. If it stays elevated at 14 or 15 and maybe beyond, then markets will continue to be very, very choppy. But to have a clear-cut understanding, I think India VIX settling at 12 or below will indicate a base building exercise, a range bound trade, and then possibly moves which could possibly take us to a higher level over and above these resistance levels of 24,300 to 24,500, I beg your pardon. So these kind of choppiness, volatility, correction, moves on both sides, concerns on the Q2 front, I think this all indicates that we need to possibly look at large cap first. If you recollect, over the last 2 or 3 weeks, we have been emphasizing that these corrections that we've seen in the markets are great opportunity to look at large cap stocks, because primarily they were the ones which had to see the selling pressure as far as FI sell side numbers were concerned, because their investments were by and large in large caps. Two names that we have today are one from a public sector bank which came out with numbers last week, and another one is from the automobile pack which also came out from the numbers about a week to 10 days ago. The first one from the automobile pack is Tata Motors. Concerns are there with respect to the slowdown in terms of production, discounts that were offered, and these discounts may come in again by November end or December midweek because of year-end inventory clearance. That may lead to a little bit of margin squeeze given the discounts getting offered. But the commentary from the management in terms of their plant in Sanand and the commentary with respect to their high-end product called JLR, Jaguar Land Rover. China stimulus is something that was announced last week, which saw some amount of concern on Indian markets, but I think stimuluses come at a cost, they don't come free. So at some point of time, that cost will come and stare in the face as far as the Chinese government's decision to bail out or give a stimulus is concerned, and they have also mentioned that for the real estate sector, they might come out with some more additional stimulus measures and policies to stabilize the real estate sector in China. But I think whatever comes out from China, one needs to possibly read the fine print and, more importantly, what is hidden between the words to clearly understand the situation in China. So this stimulus, assuming that it is what it is, then China happens to be a big market for Jaguar Land Rover also, and sales can possibly see some amount of uptick, which will add to the profitability margin because of the hand product nature. State Bank of India, the second one largest bank, public sector bank, and having its operation pan-India. Numbers were much better in certain aspects, which we saw for the second quarter. And the commentary from the management is that this recovery process that has been put in place will eventually bring down the gross and net NPAs to a much lower level. Provisionings are going to come back if that is the reality, and the margins and NIMs are going to improve. The only problem that is hurting the entire banking sector, both public and private, is the slow deposit rate. But friends, I think there are other avenues from which banks can generate liquidity and can service the expected higher credit demand growth, which will eventually lead to loan book growth. So two large cap names, one from the automobile, given the fact that Tata Motors have also corrected quite sharply compared to its peers in the sector. But we believe that these are great opportunities to nibble into or start allocating at least 25-30% of investable amount in large cap names. And then of course we will possibly review our stance as we go into the earnings season for the third, fourth quarter in the next financial year. Mind you friends, these are investable long-term ideas. These are not short-term, medium-term. You need to have at least 12, 15, 16, 18 months plus kind of time horizon to make a meaningful return out of your investments into both these names, that is Tata Motors and State Bank of India. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.